Hello, ladies and gentlemen. We are live from our office in London. So good afternoon for all of those that are joining from Europe, and good morning to our friends joining from across the pond. Thank you all for joining us here for the second edition of the VALK series talks. I'd like to give a warm welcome to the audience, more than 500 people here with us today from all around the world, ranging from entrepreneurs to finance and technology professionals, as well as academics. We are delighted to host the masterminds behind two of the biggest success stories in alternative finance of the last couple of years. We have Yieldstreet and Moonfare. Yieldstreet and Moonfare are both democratizing investment in alternative assets and making these unique opportunities available to a much larger pool of investors. They are currently each occupying their own side of the Atlantic, with Moonfare operating out of Germany and Yieldstreet operating out of the US. From Yieldstreet, we have Middleman here, co-founder and CEO of the firm. And from Moonfare, Yuri Narcis, managing director, and Dr. Stefan Pauls, co-founder and CEO. In no particular order, Stefan or Yuri, we'd love you to explain to the audience what Moonfare is, what your original vision was, and how you came about to being a leader in the market today.
Yeah, thank you, Antoine. Maybe I kick it off by just explaining what it is. So Moonfare is a digital investing platform that allows individual investors to access private equity funds like institutions do, and so they can build their own portfolio. We basically have three benefits for investors. First, we give the best access in the first place to top-tier private equity funds. Second, the entire process is digital, and so it's fun and easy, which it didn't used to be. So that makes it better for the investors, but also makes the model actually scalable. And last but not least, we actually have an investment team that spends a lot of time and effort on selecting those best opportunities that are really suitable for personal and private investors. So they look not just at the funds with the highest returns, but also with the highest persistence of those returns. And that would make sure that they have really a repeatable model. And I was actually wondering, because we have a very smooth user experience, is it okay if I can show a video to demonstrate how it works in real life?
Yeah, sure, absolutely. I mean, this is, a picture is worth 1,000 words. So let's kick it off. Do you know how to share your screen? Maybe just on the bottom.
Let me see how that's running here, but I try my best.
Let's do that.
Do you see my screen?
Your
Perfect.
access to private equity. As an investor, you can quickly create an account by completing Moonfare's registration process. On the homepage, you will find Moonfare's selection of top-tier private equity funds. You can click on a fund to access documents and information on the general partner, underlying fund, and feeder vehicle. Investors can request allocations to funds. In order to finalize your subscription, become a qualified investor by completing your investor profile. This includes providing personal information, completing a questionnaire, and verifying your identity online. Once your request is approved by Moonfare, you can finalize your subscription by signing documents online. On your portfolio page, you will be able to manage your pending and active investments, fulfill drawdown notices, and access fund reporting. Moonfare, your access to top-tier private equity funds.
So, wow, this is absolutely stunning. I mean, and it is the final picture of the product today, as everyone knows it. But I imagine when you started, it wasn't exactly this way. So, can you tell us a little more about, how you started, when you started, what's the story behind Moonfare, and how you went from being initially obviously a challenger to becoming, the powerhouse you're today.
I think that's for Stefan best to answer.
Yeah, look, Antoine, thanks a lot. And first of all, a big thank you really to you and the VALK organization for being here. It's a great pleasure to have the chance to talk about alternative markets and the democratization, because this is really a topic which represents our mission and which is comes from the deepest end of our hearts. So, the foundation of Moonfare really goes back to my time at KKR. So I spent 11, 12 years with KKR in London and was running their German operations. And post-financial crisis, really, it started that we had discussions within KKR. The same happened at Carlyle, Blackstone, and the other places about, how can we access private markets or give private individuals access to the beauty of the asset class private equity. And what's the beauty here? And many of the audience will know this, but this is really from a risk return perspective, one of the most attractive asset classes to play globally at all. We are talking in terms of IRR, the best funds, and I'm talking here about time series of 20 years and more. We're talking about north of 20% returns that the best funds consistently deliver. The problem is, and you said it in the beginning, it's not accessible for the, call it, ordinary investor. It was really an asset class, be exclusive, accessible for large institutions, the pension funds in the US, the large government funds, 20 million and more investment per fund is the normal. So it was not at all accessible for the ordinary individual investor. Look, and at KKR, I knew there would be huge demand, really, from private investors to get access, but there was no solution. So when we came up with Moonfare and when I founded the company 2016, I said, I really want to solve this. I want to democratize the space. And when I talk about democratizing, it's really three things that mattered, and that was the starting point. It's getting the minimums down so that people can invest, and we got them down to as little, this is regulatory stuff, we talk later about it, as little as 50K in certain jurisdictions to invest into our products. The second thing is really, not many people know and are able to pick the right funds, because the selection of the manager, this is really what matters. So we are doing this with a team, investment team from the industry. We know exactly what we do, and we pick the best offering globally for our investors. The third thing is what we are solving, and that was a concern of many individual investors. When we talked to them, they said, wow, I'm locked in a product with a maturity of 10 years. What happens if I get divorced? What happens if I lose my job? So we created a secondary marketplace that is providing liquidity to our users. And then you saw it in this short video. It's really the ease of use. If you decide now, Antoine, or anyone in the audience, to go to our platform and say, I want to invest into a KKR or a Carlyle or a Kostler fund, whatever is on the platform, it takes you 15 minutes end to end. And you are done, including the accreditation, including the know your customer and all the cumbersome stuff that in an offline world would take you days. So this is really what we did. We took the investing into private equity into the digital age. And to your question, was it always clear what we were doing? Frankly, and we'll talk later maybe about it, we had a couple of hurdles to overcome, but I'm a pretty stubborn guy. So I really kept on doing what I wanted to do, and I was convinced there is a market. There was the vision that this should be really available, for the benefit of prosperity for the individuals as well. I always found it, unfair, I would say, frankly, that only the big boys, the large institutions could play private markets, but private individuals are left out. So this is what we are changing. There was one deviation from the original plan. We started the company actually in London. But then the early signs of Brexit occurred, and we took the decision to move the company to Berlin. Today, our headquarters is Berlin, but we have just opened up our office in London. A big
you're back in town.
You saw, we are in town.
Yeah.
You can come and visit us. We have an office in Hong Kong as well, and of course in Luxembourg. So we have a couple of locations there where we are present. But that is really the only change from the original, at least overarching game plan, is the headquarters is now in Berlin.
Amazing. And first of all, I mean, congratulations for opening the office back in London. For sure, we'll be visiting you. And these stories always sound familiar. Having a vision coming from an industry and wanted to change it and transform it for the better, to broaden its scope. And I think this is something that sounds familiar to the Yieldstreet story. And Milan, from what you've heard about the guys at Moonfare, what is similar with your story, and what differs? We'd love to hear a bit more.
Yeah, no. So Antoine, thank you so much for having me, and to the VALK team. And it's great to be on this panel talking about democratization, which is a topic obviously of extreme passion for me. So I'll try to keep it brief, because a lot of the points that both Stefan and Yuri made are very applicable to Yieldstreet as well. For me, it was really a personal journey of why we started Yieldstreet. So at the very outset, access to and distribution of alternatives is fundamentally broken. And as Stefan pointed out, it is creating an income and opportunity gap for most of the population, 99% of the population. And so our thesis really was, how can you open that up, use fractionalization technology and changes to regulation to really get ordinary people to be investing alongside big boys in institutional quality investments. And so that was really the thesis behind the company. And for me, the actual thought came right after the global financial crisis. And I actually do not come from the financial services ecosystem. I am, really, I come from the technology background, entrepreneur with, previous successes. But for me, coming out of the global financial crisis, I came to United States as an immigrant student. And I was told 60-40 is the way to go. Stocks and bonds, you invest, 401k plans, which is kind of equivalent of savings plans in Europe, KG system in Germany. And then, you have your 529, which is, plans for your kids to go to college. You do all of that. And global financial crisis hit, my portfolio was down 50%. And I was like, oh my God, I did whatever I was told to do. And here I am left holding the bag. And what I then did was called up my financial advisor and said, hey, can I get access to kind of non-correlated products away from the stock market? Typically products that you would get access through kind of the stuff that private equity funds or credit funds would do. And he started laughing. He said, I know I'm your wealth manager, but Milan, you don't have any wealth to invest in those offerings that require minimum 6-figure checks, 7-figure checks, and you are locked up for 7 to 10 years, so you cannot do that. And that kind of really stuck in my mind. And then, as I was saying, regulatory changes happened. I met my co-founder, Michael Weiss, who actually comes from the investing world, from the credit world, from the alternative world. And we both really teamed up to create this easy platform. So if I may, since, Yuri showed the video, maybe I'll show you what does our vision look like in the next couple of years as we are, building Yieldstreet into the future of digital wealth management and digital investing. So can I do that?
Obviously, if the Moonfare guys show the video, you're more than welcome to do so.
All right, so let's see if this is going to work. I'll try.
Awesome.
Okay, you can see my screen, right?
We can see the skyline.
Awesome.
You were born for great things. To grow. To lead. To build. To take tomorrow. And take today. You were born to write your own story. So what's stopping you? At Yieldstreet, we want you to realize your full potential. So we built the future of wealth management. One platform that meets all of your financial needs. A cohesive place to visualize your wealth. To build a legacy. Get complete access to unique investment products once reserved for the 1%. Discover diverse asset classes to build a modern portfolio that works for you now. Invest in your future with smart, tech-driven investments personalized for your goals. Go beyond borders. no matter what language you speak or the currency you start with. Get returns for the rainy days and for your day-to-days. So bring us your passions. We want your curiosities. Hand us the impossibles. We're here to help you make the most of your money. Ready to partner with you and your family so you can focus on fueling your future. Take your money and your life to the next level. Unlock your full potential with Yieldstreet.
Thanks a lot, Milan. I mean, there again, we see the vision you've already achieved, and the product that looks exactly like the Moonfare one, very intuitive and prone to be used by literally anyone. Now, what's really interesting for our audience today, because we have a lot of entrepreneurs, is how did you get here? I mean, what were the biggest hurdles you had to overcome? I heard you speak about regulation, about digitization, about technology. You know, what were the biggest headaches you had in your journey that you had to overcome to, manage to build the solution you have today with the kind of adoption we see and the absolutely incredible numbers in terms of investments and deals that happened on your platform?
You want me to go first?
Yeah, sure. Just relating to there again, we see the final product, which is amazing. But what's interesting is that it's everything that happened behind the scenes to get there, and the biggest complications and hurdles you had. What are these? Because a lot of us around here, whether they're entrepreneurs or finance or tech people, are facing them, and we want to hear your story and how you overcame them.
Of course. So I think one of the biggest hurdles was regulatory. And I think in the US, President Obama passed the Jobs Act, which enabled the change to accredited investor definition. So more people could invest in these type of investments. And then also you could do general solicitation, which typically private equity funds and hedge funds could not do in the US. And general solicitation means you could basically put up a website and advertise the product. So I think that was one of the big hurdles that existed in the market. The other hurdles was just the structure of the funds. And I'm sure Yuri and Stephen would have gone through the pain and still going through the pain every day. But regulatory structures are extremely complicated. And so it takes time. So for example, when we started Yieldstreet about 5 or 6 years ago, we used to only offer a fund structure that was limited to 99 investors. And that would create a lot of hassle for the growth of the company because you would cap off at 95 investments. What that meant was if the deal size is large, your minimums are going to be large. And so that was kind of one of the first hurdles of how do you kind of move away from typical investment funds to more scalable distribution vehicles. And so we had to spend some time coming up with those distribution vehicles. And over the last several years, things have changed on regulation, crowdfunding, Reg A Plus offerings that a lot of real estate platforms use that enable more investors to take part. So like that was really one big bucket of hurdles. The second big bucket of hurdles is when you're in investment management and when you're asking people for money and when it is online and you don't have any sales team, that's a pretty big hurdle for the first couple of years. So I still remember I used to have 4 to 6 o'clock in the evening blocked on my calendar to call friends and family. We would put these investments up on the platform and nobody would know about Yieldstreet or would come and not able to understand it, right? And so I would call up my friends and they would say, hey, I know you don't have investment background. Like, what are you doing? Why are you calling me and saying, hey, 10%, 11% returns? Like, what do you know about this investment? And so there was a lot of skepticism in the market as we were building the brand. And so that was really in the first couple of years, a big portion of what we had to overcome. And we did that purely from having ease of use, beautiful user interface, transparency, and focus on investor education. And even today, that is really a really big part of who Yieldstreet is with regards to how we kind of educate our investor base. And our benchmark really, we tell this to our team internally, is that when you launch investments on the platform, the summary page, you should be able to read and explain that deal to your mom. If you cannot do that, you should not invest because nothing is so complicated. And I think the street historically has made 100-page PPMs, and obviously those
Yeah.
are required to make sure that you're following the law and disclosing everything. But at the end of the day, at a fundamental level, an investment cannot be that complicated, and so we've tried to kind of do that. And so those were big hurdles that we had to overcome in the early days. And then after that, it was mostly around how do you create moments of joy to build that trust. And one of the big things that we did is, and I think this is a big difference with Moonfare, is that we actually do a bunch of funds, but historically we did direct investments in variety of different asset classes. So within real estate we would invest in apartment complexes or hotels and things like that. So there were individual discrete investments, and most of the investments, as you saw from the video, were income generating. So you're either getting kind of a monthly or a quarterly coupon. So you're creating those moments of joy, because once you invest money, you would get a text from us saying, hey, you just got paid whatever, $600 or $2,000. And that kind of created that, kind of a feedback cycle with the consumer, because you don't typically get that, investor experience, right?
Absolutely.
So those are the things that were really helpful for us early days to kind of overcome some of the obstacles and build that trust with our user base.
And was there any, just before we move to Moon's first part of the story there as well, was there any tipping points, any event that brought you from really begging your friends and family to look at the investment and the opportunities? I'm exaggerating, of course, right? To having that kind of organic network product-led growth that comes from the user experience and everything you described. Or it was just very gradual?
No, it was absolutely, it's a great question. February 21st, 2017 was the tipping point. So this was almost 2 years after we had launched the platform, and we launched an investment, and there were a few hundred people logged in at the same time to subscribe to that investment, and our website crashed. And that's when we knew that there was going to be, that's really when we knew that, there is interest in investor demand, and it's really spiking. And we were still running on 3 AWS boxes that could not do parallel threading effectively. And so that was I think one of the big first milestones for us with regards to really understanding that now if you do all the things that I mentioned previously with regards to investor education and building that reputation and brand, then people will start to come and invest on the platform.
That's very interesting, and for all the CTOs out there, please be ready for that tipping point when it happens to your solution. Yuri and Stefan, I mean, on your end as well, I imagine, yes, a lot of people may have wanted to invest in private equity funds and didn't have the means to, but when you went and spoke to these very traditional, private equity guys, Stefan's, your ex-colleagues, and other in the industry, I mean, how did they react? They can raise money from LPs, especially the top funds, very easily. I mean, did they think you were crazy?
Before I go into this, Milan, I must say you have to borrow me your video. I need it privately for my children. I want to play it tonight because they keep on asking, what is it what you are doing with Moonfare? They don't get it. If they watch your video, they will be touched as I am and will get it. So only for private use. But to your question, Antoine, look, the private equity industry was really in the beginning not the bottleneck. They knew me, of course. There's a lot of trust, and I've been part of that industry for years. But what really was the bottleneck when I pitched the idea back in 2015-16 to bankers, and I met a very, very senior guy. I don't want to mention his name, but a very trusted and famous CEO from a very famous bank in Europe. And I knew him personally, and I was meeting him in a hotel here in Munich. And I pitched the idea of Moonfare and this democratization thing. He was answering, look, Stefan, I like you, but this is the most stupid idea I've ever heard. That was the reaction. There is no market out there. You will never get anyone to invest 100K or whatever it is, 50K digitally into a platform in private equity. No one understands what private equity is. He said literally to me, you should go back to KKR. It's a better place for you and a better place for the world. So in retro perspective, I can understand it, because what we are forgetting today, Clint and I, is if you look back 5 years, the journey that we have taken, the US is slightly different because frankly more advanced in terms of alternatives and understanding, but private markets was not at all a topic at all. People were, still suffering from the losses in public markets. Stock markets were, recovering, but the situation was very, very different from what it is today. And if you think what has happened, and all this, I dare to say, Yieldstreet, Moonfare is all a consequence of the financial crisis. As you said it, Milan, from your personal experience, what we have today is zero to negative interest environment, and this is here to stay, in particular in Europe, by the way. Yeah? We have unprecedented tax reliefs as we're seeing in the US, and we have a cocktail of the largest government spending ever in order to cope with the crisis. As you know, we are talking about announced spending of $6 trillion US, and the US alone stands for 50% of it. So this is unbelievable, and this is why the 60-40 model, and Milan, you could talk for Moonfare and probably the other way around, yeah? The 60-40 model, as I keep on saying, it's over. So the private markets access is where people have to be, whether it's institutions or private individuals. And one stat that might be helpful to understand the dimension here, the smartest investors on earth. And let me take now a US example, and they might be happy to hear it, but I am a big admirer of Yale Endowment and Harvard, where I used to study as well. So these guys, they invest more than 50% of the global assets they have into private markets, 50. The private individual is totally left out because of lack of alternatives, lack of access, lack of convenience, lack of liquidity, and they stand at 3%. And here we see the huge gap. And coming back to your video, and then Yuri, you should jump in with your views, please, Milan. This is exactly what we want, that the ordinary guy with his family really can participate in that value creation that's happening there. Take what, private companies, they stay longer and longer. The entire Central Road and Silicon Valley have learned that they keep the assets for a very long time in private hands before they go public. It's not going to happen that easily that the Googles and the Amazons and Facebooks are in public markets far before they have reached, a peak in their valuations. And if you look at the more recent IPOs, you see the disappointment in public markets. Yeah. So what is it? What you have to do? You have to get access, or you have to play markets, private markets, and this is where really, from a risk-return perspective, also another level of diversification from a return, but also from a risk perspective, is added to your portfolio. This is why, frankly, I'm so glad that Milan with his team, and others out there are helping to educate the world, so that people understand, because it is a difficult asset class. It's not an ordinary stock that you pick, and really let people participate. And this is just the beginning. And last point, because for me it was a signature moment, and when Millet was talking about tipping point, my tipping point is more recent, frankly. Maybe I'm a little bit exaggerating, but we had a fund, by the way, a US tech fund on the platform. For legal reasons, I'm not allowed to state the name, but look it up and register at the Moonfare platform. It was a great, fantastic product. And it was the first time that we invested into a single, or our investors invested into a single fund, 200 million. This is sizable. We started with 10 million, calling, as you said, friends and family, and please come in and invest with us. It was EQT Asia, back in 2018. And now we are at a 200 million investment into a single fund. That's my tipping point.
That's awesome. Congrats.
It's very, very impressive, and I'm sure looking back, you couldn't imagine that this would happen so fast. And it's a great example, and you're leading the way for the rest of the players in the industry. Speaking of successes and milestones, we've spoken about the hurdles and the difficulties you've overcome. There is a very big achievement that Yieldstreet has announced recently. That you guys raised 100 million for your Series C, if I'm not mistaken, and everyone here in the room would like to to know what is, the achievements that you're the most proud of within your journey. And these don't necessarily have to be the ones that are public and out there, although they're all very important. Many people would like to know the ones behind the scenes, the ones that you don't necessarily talk about, that you're the proudest within your journey with Yieldstreet.
Yeah, so I think, Antoine, for us, it all comes down to investor. I think that's the common theme that you're hearing from both the companies. And ultimately, it's about the investor. And for us, our big goal is that by 2025, we want 25 billion to be invested outside the stock market. But I think more importantly, our investors to generate $3 billion of interest income. And Stefan said this about the performance of the private markets. I think that is very important. How can ordinary investors take part in that value creation is something that is really paramount to us. So I think one of the big stats that we are, releasing is that, there is over 2 billion that has been invested through the platform over the last 5 years. But I think more importantly, we have returned over $1 billion back to our investors in principal and interest payments. And that's across, I think, 160 transactions that are fully mature and paid off. So I think that is something that we are really proud of. And I think the other big milestone in the democratization journey that I would like to mention is last year we launched something called a Prism Fund, which is a diversified 40-Act fund. Leave aside the technicalities, but it's basically one fund, as the name suggests, Prism, that you invest once and then you get access to multiple investments across variety of asset classes. And that was the first fund that took us almost 18 months to get approved from the regulators. But it's the first fund that was open to non-accredited investors. And we are really proud to say that the minimum on that fund right now is $1,000. And I think, and we have literally thousands and thousands of people that are part of that fund. And it gives the 8% distribution rate per quarter. So these type of things, I think, are really, for us, very proud moments as we are kind of building and scaling the platform.
And innovating as well, in within your own ecosystem, and bringing always new solutions to your community. And speaking of innovation, there's on the Moonfare side, also some news you shared in the beginning of the year about opening up a digital secondary market. And I can tell you that here at VALK, this was the essence and the fuel behind all of our vision, as well as many other financial entrepreneurs around the world. But you guys have pulled it off. And this is very, very impressive. So everyone here would like to know, what is this digital secondary market? What does it mean for your clients? And how do you see it, going forward?
Yeah, look, as I said it in the beginning, that is one of the big obstacles for the, call it ordinary private investor, by the way, including myself, because, you don't know the future and you're locked up for, a much longer period. It's an illiquid market. And we thought, really a lot about it. How can we solve it for our investors? And we came up, in the meantime, we have 13 or 14,000 people, high net worth individuals that are registered on the Moonfare platform. And we said, look, it's an enormous amount of people. So we must be able to create an efficient market in terms of selling and buying. So we came up with the idea to create a digital marketplace where people can sell after 1 year already their stake in a, let's say, KKR or a Cinven or a Blackstone fund, if they need to. We always tell people, look, you should see this as a long-term game. This is not trading. Trading is what the Robin Hoods and the Revoluts of this world do. We are not traders. This is be patient, be a patient investor. But if you have to, there is a backstop. And there's one thing or one caveat we saw at post-financial crisis where suddenly many people were paper long, but cash short. Yeah, and there was no secondary market at that point of time, and many people defaulted. Even institutional investors, they couldn't serve their capital calls. So we said, look, we need a professional solution, not only a private marketplace, which is great. And we partnered with one of the largest, most successful global secondary players, which is Lexington Partners. And this brings me back in a minute. What you said was so much resonating to me. what everything keeps together, it's what is the glue behind what we are doing. By the way, it's also true for private relationships, it's trust. Yeah, and I'm so thankful that the Lexington people, they trusted us, the GPs, the funds, they trusted us to work with us. Most importantly, of course, our investors who give us day in, day out the trust to invest with us. And then, of course, the team that trusted me and my partners and our vision. Yeah, so the trading platform, the illiquidity solution that we brought is really something special because it is, and this is why we are proud of it, it's really a global innovation. It doesn't exist in that sort of thing and in that professionalism globally. It's live. Interestingly, not many people are using it currently. Yeah, people are still long and more in investment mode. But look, we all know this. The sunshine and the honeymoon might end, and then this will be one of the features that really differentiates us from anyone else in the private equity game out there.
Yeah, and if I may, sorry, Antoine, if I may add to what Stefan was saying, this is something which is a real passion of mine. So we also launched a secondary market in May for one of our fund products, in fact, for the Prism Fund. And my thesis really is that the premium that you pay for liquidity is insane, and especially at the retail level. People are either sitting on too much cash because they're afraid, or people are paying insane amount of premium to be in the liquid solutions, right? And I think this can be a game changer because I feel that there should be permanent capital at the asset level, but liquidity at the user level. And that will change the dynamics of private markets forever. And I think in the next decade, that's absolutely going to happen because, you can get users to come in and out depending upon their liquidity needs. But you can really have permanent capital at the asset level for the asset to perform over a longer period of time to not put pressure on that asset, and I think that dynamic is going to be amazing. And Antoine, what you guys are doing at VALK is, I think, super interesting because a blockchain can play a very, very big role in the next 5 years or so in terms of democratizing the secondary, markets. Because if you can really, figure out how do you take the asset and make sure that, you could either tokenize the asset itself or create some sort of a solution that does not require a lot of due diligence, paperwork, and stuff like that for assets to change hand, that efficiency can really be very, very powerful in my opinion.
No, absolutely. But what is very important to remember, and I think all of us here are experiencing it, is that there is a technological part of it, which is definitely an enabler. But what we'd all be curious to understand, and this is all personal views, is, how much of it is a cultural and behavioral component that is essential for the secondary markets to start being more mainstream. I mean, what is needed and how long will it take, according to you, for just the investors to know they have this possibility of having this secondary market liquidity and go on to these markets? Because I'm sure even Stefan, you mentioned it. Millen, I'd love to hear your views on that. Only a fraction of your investors are actually using it or maybe even aware of it.
Yeah, so I think, listen, the trick with secondary market is nobody wants liquidity till everybody wants liquidity.
Yeah,
right?
exactly.
That's the nature of these things, right? But I think it's much more little bit top of the funnel, meaning like a lot of people, instead of putting, let's say, out of $100, maybe allocating 20 to alts, may now allocate 40 to alts. Because there is an option of liquidity. So I think the adoption aspect is going to be a huge factor if secondary liquidity is available, and it is available with reliability, which may not always be the case, right? And so I think that aspect is very important for people to understand, but it's better than not having liquidity at all. And so I think these are all the steps that people are taking in order to do that. If I may be even a little bit more provocative, and I would love to hear Stefan and Yuri's thoughts on this, I personally feel that capital formation is so archaic, where portfolio managers spend inordinate amount of time raising capital from LPs and based on a theme, and then they're forced to deploy that capital on that specific theme. My view is that capital formation should change, and this goes into the secondary market conversation. like we now have tens of thousands of users on Yieldstreet that have a savings account with us. Okay, we pay very little, interest on it because of interest rate. Stefan mentioned, but imagine that at scale. So imagine if I have $10 billion of deposits, and the users have chosen their preferences. Like, hey, I want real estate with like 9% yield, 3-year duration, and this type of risk level, right? Now I can go completely flip the model and say, hey, instead of investing in funds, I go to actually the portfolio managers and say, hey, can you create a product like this? Because I have $250 million of demand, or I have $400 million of demand across risk, duration, and yield dimensions. And that completely changes the game, because then I can take advantage of the global macro trends that are happening and make small size funds, but change the strategy more frequently versus raising these massive funds and then being forced to deploy in that thesis and then just praying that, hey, I make more good investments than bad as a portfolio manager, right? And Stefan, your KKR days, like you would totally attest to that. So I know my view is that in the next 10 years, technology can help us really get there, where you could actually, pre-create the demand and then be more efficient about capital formation.
Look, that's a vision, Milan, we have been discussing endlessly, and also with our GPs. And the question really that and discussion I had with some of them is, what is the reason for being of them? Because in a way, you could take out in a way the middleman, and you connect the investors, as you say, in particular if you have a liquidity solution directly with the assets. I think there will be some sort of divergence, and some people have to reinvent themselves. If somebody is really only connecting, some capital with some obvious targets, the value add is probably minimal, and these people might be disrupted. And this is true for, and you see it with AngelList and others. If people can, understand the investment, and the middleman is not needed because it's basically bringing together two parties, that will not be enough. But if you think about the private equity industry as an example, and take now the large players, they really add value add as an investor, because what they do is they play global playbooks, they have operational capabilities, they bundle across the portfolio the purchasing volume. So the investor needs really to have a reason for being. If there's no reason for being, and it's just connecting A and B, these people will be disrupted, and the intermediate will disappear over time. Fully with you, and technology plays a major role. And I'm a big fan to resonate in what you said, what VALK is doing with the blockchain, the tokenization, because my vision here is, and by the way, regulation has to catch up. That's one of the biggest bottlenecks. They understand it, that they have to do something. But before this really becomes, Antoine, to your question, a big theme, regulation has to change. And there's good reason and good hope that they do so, because one of the major concerns they had, among others, was lack of liquidity. And if the liquidity item is solved, why should private markets and tokenization not lead really to a new form of stock exchanges, private markets, token exchanges, where people then, and this would be for me personally really very fulfilling, everyone should have a wallet of private assets. I would like to get a fraction of a Picasso, because I believe this is one of the biggest or the greatest artists ever, that will increase in value. I can't afford it. Same what we do for private equity, same what Yieldstreet does for specialty financing, same in real estate. An apartment in New York, I think it's not a bad it's not a bad investment, but for 5 million or more, then suddenly it's not my pocket size. So I see a world coming, or hope that it's coming in 5-10 years time, where people have a wallet, 10K, and 2K in private equity, and 1K maybe in good art and old cars, and in specialty and shipping, financing, and whatever, and they have real access that they can trade. Wonderful word.
And are you, on Yuri and Stefan, are you thinking of branching out potentially to these other asset classes? You mentioned fine art and direct real estate. Do you have demand from your investors from that? Because you are, at least in Europe, for a lot of people, the the go-to place for alternative prime investments. Today it's PE, VC funds, but I mean, what's your thought on that? Do you have anything in the playbooks?
You should take it, and this is why I'm so happy that the Yieldstreet and others are out there, because it's complementary. Yeah. And there's allow me to use a German expression. We say Schuster bleib bei deinen Leisten, which means you should focus. And look, we are private equity or private market guys, so there's so much we can do. But Yuri, maybe a bit about our plans, how we are building our private market portfolio for the benefit.
Yeah, look, absolutely.
On the agenda.
So I think, as I said in the beginning, one of the things that we are really looking into is to go into this very solid, normally long-term investments. And I think Milan said it also earlier. One of the obstacles that we also have to overcome is really education. Yeah, we need to get out there, and we have an entire team that creates content and thought leadership and runs analysis to at all different levels, right? Whether it's for advanced investors or really for first-time investors who have never dealt with private assets, to get the understanding how the asset class works, and then also what kind of role it can fit in a portfolio. And what we're currently doing is really getting into those more private fund type investments. And we feel that there's a lot for us also to diversify. So 2 years ago, we had only buyout. Then we went mid-market, then we went secondary, then we went growth, and we went venture. Now we have distressed debt and credit and others. And so there's a huge opportunity to expand our business and expand our offering to the benefit of our investors, that we can still go before we go things that are further away from our core.
And speaking of that, I mean, that's a question a lot of people in the audience have asked, and that is also close to our interests. You guys have followed what's been going on with digital assets or crypto in the past years. We'd like to know, as a company or even just a personal opinion, what are your views on the whole emergence of this new alternative asset class? I'm not even speaking just about tokenization, but these assets in general, and this new community of investors and this new financial infrastructure. Is this something you'd like to cater to, or that you're just today watching as analysts and more on the R&D side?
Yeah, so that's a great question, Antoine. We are big believers in blockchain from a technology perspective. Digital currency, I'm a believer. Specific currencies, it depends on which side of the bed I wake up,
Of course.
In terms of how they're going to behave. I think broadly speaking, Yieldstreet over the last couple of years has closely kept a watch on it. And, we traditionally are a very conservative platform. And so it's mostly been asset backed and things like that. So, in the past, we have seen deals where, you could finance server farms and stuff like that, because, there's really, it requires a lot of infrastructure to be able to mine some of these digital coins. We have looked at lending against crypto assets, specifically the top 3 or 5 coins. And so we have evaluated some of those things. It just did not really pass the muster. I think crypto wallet is an interesting idea that we may explore, because our investors are really hounding us because they have trust with us. So instead of opening a wallet somewhere else, they're saying, hey, I want to, obviously Yieldstreet is not a trading platform. It's an investing platform. But at the same time, I would like some exposure. So could we get some of that? So we are exploring, potentially adding a crypto wallet, and maybe seeing if there are appropriate asset classes that we feel would pass the thesis and just the QA of how we like to do things. And hopefully we will find the right answer for our community.
Absolutely. I mean, exactly as Stefan says, it makes a lot of sense if you look at the infrastructure that's behind it, the use of wallets, the interoperability between several platforms and several ecosystems, and this is definitely somewhere that the industry will transform, but progressively, and we at VALK are working on that. One final question that everyone wants to know here, and definitely you guys, Yieldstreet and Moonfare, you were born out of similar events and out of the same vision, and you are both targeting larger base of investors with exceptional products. And as you said, we're speaking about complementary value proposition, complementary universes, and the same level of excellence on both sides. Could you envisage the two of you working together at some point?
Yeah.
It's an early stage to fall in love, yeah. But
of course,
yeah, in one or two sessions. But look, people keep on asking me, what do you think about competition? What do you think about this emerging? And we have many copycats that try to do the same what we are doing in Europe and in Asia. And I keep on telling people, look, this is not a competitive game. This is, as you said, and Milan said the same. This is about educating the market. If you take just the market size in Europe, and I'm talking now about money that is with private individuals, high net worth individuals, that should be allocated to private markets, but because of lack of opportunity, it's not allocated. We are talking about a market size, that's Europe, of 1,500 billion. 1,500 billion should be in that market and will flow, not all of it, but will flow in the market over the next, call it 10 years. So everyone who helps educating the market and really shares this mission of fairness and prosperity for a larger amount of people is really, someone I embrace. And in particular with Yieldstreet, look, it's totally complementary. It's different regions. We have the same, shares the same passion about education. And by the way, in terms of crypto and the previous question, same here. Look, I grew up with KKR, and people might believe it or not, but this is very conservative, very earth-grounded investors, yeah, that love real assets. So there's so many opportunities out there, and the business that I understand before I play, the currency stuff, I think it's a huge theme, but I don't know enough about it. There's so many other things, more conservative stuff that we are doing that I think it's worth playing. So look, ton of respect what Yieldstreet has and Milan and Tief have built. It's incredible to see. Glad that you guys are out there, and we are on the same mission globally. Yeah. So never say no, and it's as you can hear, it's a clear, not only a maybe, it's a yes, everything open to explore.
Yeah. Likewise, I would definitely second that, and I think for us. And for the audience, like we actually get calls almost weekly or monthly from specifically investors in Europe and EMEA. And currently, the market size in the US is very, very massive. I think US is going to oversee over the next 2 decades almost $40 trillion of wealth transfers from baby boomers to generation XYZ. And so, we are very focused on this market, but we know that there is a lot of, demand internationally. We actually have 2 offices, one in Athens and one in Malta, so Greece and Malta, mostly focused on engineering and our marine finance business. But we really have a desire to go, explore international. And I think partnership here with complementary products could be very interesting because we don't have any, fund products around private equity as much. Our funds are very focused on a certain theme. So I think that's really could be super interesting on both the geography side as well as on specific product collaboration side. And I personally feel that the market is really wide, and there is really nobody that is truly building kind of the next generation digital investing platform that includes access to private markets and alternatives as a key focus and thesis, and do it automatically. And personally, my belief is that rest of the products, like the banking products, as well as some of the trading, ETFs, index funds products, because of technology, it's readily accessible. And so platforms like us and Moonfare can add them to complement and increase kind of the share of wallet and increase the user experience. But the other way around is very hard to do for kind of challenger banks and trading platforms, because the stuff that we do is highly specialized. It requires decades of experience to structure and really understand what you're getting into. And so I think it's going to be an interesting evolution in the next couple of years.
Amazing. And of course, feel free to continue these discussions after the conference. We all hope that there can be some amazing synergies about between you two. So I think we're running out of time now, and I think this session and this VALK series was really amazing. We really enjoyed it here within the VALK office, and I hope you enjoyed yourselves as well as the audience. The recording will be provided for those who could not attend or who would like to watch it again. If you have any questions, you can send them to contact@valktech.io, and we will make sure to answer them or to pass them on to Yuri, Stefan, or Milind. Thank you, Milind, from the Yieldstreet side. Thank you so much, Stefan and Yuri from Moonfare. And thank you all for joining us today. Have an amazing day and rest of the week.
Thanks.
Bye-bye, guys.
You too. It was a pleasure.
Thank you.
Thank you.
Bye.
Thanks.
Bye.